Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, how you going? Welcome to the show. It's where are we? Sort of end of February at the moment, sort of battling through the year. A lot happening at the moment. I was only just on my computer just before coming on air looking at some of the information that looks like it's going to be coming out today. The Labor government seems to have changed their tune when it comes to mortgage brokers. Still lots happening. By the time this comes out, we'll probably work out what's going on, but still a lot of unknowns running off the back of the recommendations of the Hayne Royal Commission. We're watching it very closely. If you tuned in recently, we did a great podcast with it was a combined one with the Property Couch, Ben Kingsley from Property Couch and Alex Whitlock, who's Director of Mortgages at Momentum Media. The gentleman you probably heard on this podcast before chatting with me around the Smart Property Investment Property, kept my co-investor there. We had a good discussion and we've had a lot of feedback around that. So I think we covered off a lot of what's happening, but it's just really reinforced there are so many unknowns at the moment. So we'll keep watching this space, keep connected on smartpropertyinvestment.com.au. We'll make sure we're bringing you the information you need to know so you can make more informed investment decisions. But as you know, we love investor stories here. It's the very heart of the Smart Property Investment Show is really unpacking the mindset of investors and just unraveling some of their attitudes or aptitudes towards property investment. So we love to get investors on. If you're one of them and you want to come and have a chat with us, it doesn't matter whether you've got one property or you've got 1,000 properties. Everyone's got a story to tell, and this community just continues to grow and surge as more and more property investors sort of get behind it, just to really share their experience and insights invest in property. And we all have the same objective, and that's to make better investment decisions. So if you want to come on, we'd love to have you on. It's not too scary, it's not too fearful, it's actually quite good fun, what I'm led to believe. Anyway, we'll find out from today's guest to see what he thinks, but get in touch with the team, editor at smartpropertyinvestment.com.au. Just do it. If you've been thinking about it, you never got around to it, just do it now. You can send us a direct message on any of the social stuff as well. Just search Smart Property HQ and someone from our team will get back to you and we'll tee that up. But anyway, into investor stories. And I bet I'm going to get this wrong, but I'm going to try my best. Sze Chuah. Did I get that right? Our guest today? No. Yes.
Close.
How do I do it properly?
Sze Chuah.
Sze Chuah. There we go. Yeah. And what's your proper first name?
Sze.
Okay. It's good. I know I put a lot of effort to make sure I pronounce people's names correctly, so I'll do my best. But how you going? What's happening?
Yeah, pretty good. Good. Lots happening. Busy times with business and life and family in general. So yeah.
How are you keeping across all this stuff coming out of the Royal Commission, except for smartpropertyinvestment.com.au? What are the sources you're using?
Oh, it's obviously you guys, but also you can't escape it. It's everywhere. It's everywhere in the media. It's where people are talking about it at dinner and at barbecues, and just coming up to me, and in the business, obviously. So you can't escape it, and it's on the forefront of everybody's minds, not just people in the industry.
Yeah, I think it is, and a lot of people just aren't too sure about it all, and we're just trying to unravel it. But it's a watch this space thing. I don't want to dig too much into it. I thought the opportunity having you on the podcast today, Sze, was just have a chat through your journey as a property investor, and I've got a little bit of an insight into your portfolio, and I don't want to give too much away. We'll do it live on air, but you've been at it for a little while, and you are a sophisticated investor. You have a reasonably large portfolio. So how old are you? You're not that old.
38.
You're 38. Okay.
Yeah.
How many properties are in your portfolio now?
25.
Okay. So you haven't been messing around. You've been moving pretty quickly. And when did you start investing?
2010 was the first investment property.
Okay. So you've over 8.5 years, you've created a portfolio of 25 properties.
Yeah, most of them was actually done in the first few years. So I went out really hard when lending was a lot easier, and the property markets were a lot more conducive to accumulation at a fast rate, and then sort of slowed down. Had a bit of a forced consolidation with a career change, and then recently started to reacquire again.
That's cool. So your first property, let's start back then and go through this journey. Just to help me out, you're pretty diversified. You've got properties all over the joint.
Got New South Wales, Queensland, and that's it. Yeah.
Okay. So I imagine in 2010 you were buying in Sydney.
Yes.
Okay.
Yes.
Tell me about the first property.
So the first investment property was in Carramar, near Fairfield.
Okay.
Southwest of Sydney. First owner occupied was in West Ryde.
Okay.
Yeah.
Is that where you live? still? Or
No. So
okay.
we've moved out from there.
Okay. Do you keep it as investment property?
Yes.
Or, yeah.
Yes,
Okay. All right.
yes.
So the first property you bought, Carramar, is it?
Yes.
Down near Fairfield Way. Yep. Which for people who are not Sydney is sort of southish west. It's sort of more. It's a straight line pretty much from Sydney, and just down a bit off Parramatta Road is probably the easiest way to think about it. Is that fair?
Yeah, I guess so.
Close enough. What was it? What did you buy?
It was a very ugly looking unit on the top floor of a sort of heavy density kind of area around the Carramar station.
Okay.
Yeah, it was pretty original condition. It was off memory about $170,000.
Okay.
180,000, two better. Yeah. One of those red brick blocks.
Yeah. No lifts, no nothing, just...
Yeah, it was 3 flights of stairs up. So
they're the stuff that's good stuff, right? You know, these old red bricks built in the sort of 60s, 70s, and there's not too much that goes wrong with them.
I didn't think so at the time. The agent that took me through had a real good time of convincing me of the value of it. I just looked at it. You know, I grew up in Cherrybrook. You buy a property for $400,000 and rents for $300 a week. This one, you know, it was $180,000, but rented for $280 a week, and I just couldn't get my head around it. I was like, "Is that right?"
Doesn't work.
Yeah, that's right.
So it's had a good yield on it from the get go.
Yeah, fantastic.
Yeah. So did you buy it at sort of 80%, 90% LVR?
90%.
Okay.
Yeah.
Back when lending was a little bit easier.
Yeah.
But what is it? Positive gear from there would have been pretty close, right?
Yeah.
Yeah, that's sort of amount. Okay. You still got it?
Still got it. Yeah.
What do you reckon it's valued at today?
About 350, 400.
Okay.
If I'm optimistic.
Yeah. So it's done reasonably well.
Yeah.
Over a 9-year period. And so the next property you purchased was your principal place of residence?
Oh no, that was prior.
That was prior.
Yeah.
Okay. So you bought your own home to live in first before you started investing in property.
Yeah.
Okay, that's cool. So run me through sort of the next few purchases after that first investment.
So next few purchases, the next one was in my wife's name, and that was in North Parramatta, so on Church Street.
Yeah.
Again, took a lot of convincing. I thought main road, big no for investment property, big block, and I thought, again, original condition. I thought, what's so great about this property? Ended up being a $250,000 unit that's now probably worth $500,000 plus. Okay. So
there's quite a lot along Parramatta, right? Is it north? The sort of north? Where was it? Sorry,
yeah,
Church
the north.
Street.
Yeah, Church Street, north side of Parramatta, sort of near the cemetery.
Yeah, okay, I know exactly where it was. It is. Yeah. It used to be like a hog's breath thing there. They all got knocked down and they turned it into apartments. But I know the area well. It's just a lot of apartments along that stretch.
I have a funny story about that one. I thought at that point I was going to be not just an investor, but a renovating investor.
Okay.
So, and not having previously touched the tools before, I thought I'll start small. I'll just do a clean up of the bathroom. So I went to Bunnings, bought a whole heap of stuff, scrubbed for about 3 hours, came out sweating, and it looked exactly the same as it did before. So at that point, my renovating career just stopped.
So you haven't done anything since?
No. I've project managed renovations, but not actually, gotten on the tools.
That's good. So you give me a really good hook then, because I want to chat about this. Just really your investment philosophy. So, you thought, the reason why I want to start these original properties is I look back to when I started investing, I didn't know what I was doing. So like I did things like that where I just sort of started doing something, it's not working too well. So maybe I need to realign. But your investment philosophy, has it been to manufacture equity in these properties through renovation, but you don't want to do it yourself, or is it a long haul strategy for you? If you had to crystallize your investment strategy in a couple of sentences, what would it be?
I think it's to do a combination of those things. So long-term growth to me is always important, because there's no point in having a portfolio that's neutral or positive cash flow, but doesn't create you wealth over the long term. Also, having a strategy that costs a lot to hold your portfolio doesn't make sense as well. So it's a bit of a balancing act to me of cash flow and capital growth and manufacturing of equity. And the other element of it is the outsourcing of it. I'm, like we just said, I'm not an expert in renovations, nor am I an expert in sourcing properties, nor am I an expert in the conveyancing side. So I'll always look to find good people and a good team to assist me through the process and give me the valuable advice to guide me in the right direction.
So going forwards, then we'll come back from there. You said 25 properties at the moment. Is that their investment properties, not counting your principal place of residence?
No, I'm currently renting.
You're currently renting?
Doing the rent vesting.
Okay, yeah, there you go. So this sort of 25 properties, what's the sort of collective value, do you think, of your portfolio right now?
Oh, it's close to 10 mil.
Okay, close to 10 mil. And what sort of debt are you carrying on that, do you reckon?
Under 6.
Under 6, okay. So you're running the sort of LVR of, it's really easy numbers, of 60%, right? So, so the bank owns 60% of your portfolio, you own 40% of it.
Yep.
Is that an equity level that you're happy with right now, or what's your strategies to bring that down? Have you got enough properties now to sort yourself out and do whatever you want to do with it, or are you going to keep acquiring?
I'd like to keep acquiring, if anything, just to sort of keep in the game and feel like I'm still in the game. I am comfortable with the debt to equity ratio.
Yeah,
it was a lot higher when I started. I was borrowing at 90%. Pretty much, the whole time for the first couple of years, and that's where I acquired most of my properties. And then since then, the price rises and the market movements have really helped me create that gap. So I'm pretty happy with where it is. I'm happy to leverage up a little bit, but now I'm a bit older than what I was when I started. I wouldn't want to go back up to that 85, 90% again, nor would lending really allow me
to do that. Yeah, which is a challenge a lot of investors are facing. So what's the long-term plan for you with property? Is it to be a mechanism for retirement, or is it wealth creation? Is it a generational play? You want to make your kids rich?
I think it's the idea? A bit of all of the above. A bit of the ability to create the lifestyle that I want to live, the ability to create wealth and give back to less privileged people, ability to pass on to the family, and it's just fun. Yeah,
it is just fun, and I quite enjoy the game of property. Hopefully the outcome is what you want, but 25 properties is not a lot of people going around with that many. It's a considerable sort of portfolio. Do you find it a struggle to manage all of them? What sort of process do you use to keep in touch with them, and whether or not sometimes I look at my portfolio, I don't even know if I've got tons of something, right? It's pretty bad. So how do you manage it?
In a pretty similar fashion. Like, it's a bit of chaos. I've tried tracking it a lot more closely, and that sort of lasts for weeks at a time, and then it sort of stops. And having a young family and a business, and it just, the juggling act of it all is difficult. So sometimes what I preach to my clients in terms of having everything very well organized, I don't always follow myself. So sorry, anybody listening. But I guess tax time is a challenge. Tax time and finance time is a challenge, because not having all of the processes, I won't say it's complete chaos, but I have built some kind of processes, but I don't follow like everything that I should. So it's a work in progress.
But you know what? That's okay. And I think it's a really reflective way to look at it. You always think that I can always do better. Maybe that's an excuse. But the beauty of property, I find, is that if you set it up and buy correctly at the front end, I'm not going to say neglect, but if you sort of take your emphasis off your portfolio for a little while, as long as you bought well, there's not too much that can go wrong, right? As long as you've got people in there paying rent is the key thing, right? I can always spend more time on my portfolio, but I wouldn't know what the actual outcome of that would be. And it sounds like you probably see the world the same way.
Yeah, that's right. That's the big picture stuff, like the fact that you've bought well, bought strategically, you're balanced and diversified across, not just which areas that you buy in, but the types of properties. Like, some could be cash flow properties as well as growth properties. Some could have the potential to subdivide or to add value in the future, add a granny flat, for instance. So that's really the important stuff. So there's such going in, there's such an emphasis on that. So
I think it's critical, and you touched on some concepts there which are pretty important. We'll get into them in terms of the makeup of a property portfolio, and you have different properties that are in there for different purposes, which is pretty important. How have you structured the ownership of these properties? Did you invest? You mentioned that you had one of your second investment property in your wife's name. That's beneficial to a point in time to keep you under thresholds with like land tax and stuff, and eventually it doesn't matter. How have you structured the ownership of these properties, this portfolio?
I was very deliberate and getting good advice again from the start. I was very deliberate in segregating each of the properties in our individual names or the entity, the relevant entity, whether it be our family trust or the self-managed super fund, but not having sort of those joint ownerships, because that does kind of start to muddy land tax and negative gearing and borrowing. So there are implications on all of those things. So again, I was very fortunate to get the right advice from the start. I've got, quite a few of my properties in my name, quite a few in my wife's name, and I'm growing the family trust and the super fund as well.
How do you work out, like, whether put it in super, put it in a trust, put it in an individual name? You imagine you've got a good accountant that helps you with this sort of stuff?
Yeah, definitely.
Yeah. And is that a big focus, a big conversation point that helps you lead the type of properties you're going to buy? Or is it just, hey, I found a really good property here, let's work out where to stick it?
You sort of get a bit of an idea as to what the principles are in terms of whether it might be a negative gearing or marginal tax rates or land tax, like you say, where the property fits in terms of what the intention of the property is. So if it's a property that you're looking at, we're looking at developing in the future and then selling at some stage, and it's going to have a capital gains implication, then something like a family trust or a lower tax entity would make a lot of sense.
Yeah, it's important if you're not thinking this way as an investor, even if you've got one property, but you're looking to grow your portfolio, you've got to start thinking about structure. Structure is absolutely critical, because it's often once you do a lot of investing that you sit there at an end point and go, oh, I'm not really happy with the structure I currently have. And it's really hard to unravel structure which isn't purpose built without costing you a lot of money. So it's good to get the advice early on, even if you think it's blue sky thinking. If you're setting out to build a portfolio of 5 or 10 properties, you've got to get your structure right from the very first property. So speaking to a good accountant that knows property, and they should be able to help you out with that sort of stuff. So going back, 25 properties in your portfolio, your first couple, red brick, 2-bedroom apartment type stuff, cookie cutter, you could build a great portfolio on that. If you bought that stuff back in 2010, in 20 years' time, you'd be absolutely killing it, right?
Yes.
So did you sort of get a little bit more advanced or sophisticated in the type of properties that you started purchase? Can you tell us about your sort of 3rd, 4th, 5th, 6th, 7th property?
Yeah, it just sort of stayed pretty basic, because the first few were units, and it just sort of so happened that way. It wasn't like a particular deliberate strategy. It was the first few were units. After a while, myself and the property strategist sat down and thought, oh, wow, we've got a lot of units. Let's start balancing it up with some land and some more sort of blue chip assets. We've got some good cash flow, so we can afford to balance it up with some good capital growth assets.
And where'd you buy? What sort of suburbs then?
So we bought a lot in Mount Druitt, Penrith, Campbelltown, Parramatta area.
Okay.
So
yeah. I imagine you've done pretty well out of all of them.
Yeah.
Over that period of time. Yeah. Even I was reading headlines that I reckon property's going to drop by 50% now, right?
Yeah, I heard those as well.
Shit. That's yeah.
We'll be all out of a job.
Well, I think the whole economy will cave in if that happened, and
disastrous.
Hopefully we've got some smart and sensible people in the corridors of power, making sure that our economy, which, to be fair, globally over the last 10 years has performed very well, despite some serious headwinds, including the global financial crisis. So anyway, watch this space. But it all comes down to how well you buy. So you bought up reasonably heavy in that sort of Penrith, western suburbs, southwest suburbs of Sydney. When did you pull the trigger and move? I imagine not knowing your portfolio, but I reckon you went to Brisbane in about 2015.
A little bit earlier, actually.
Okay.
Yeah,
right.
I think it was 13 or 14, and bought a little unit in Logan or Woodridge.
Okay.
And then bought a few more in sort of the Brizzy area, a few in the sort of coastal parts of northern Queensland, so Sunshine Coast, Cairns. and then came back to the Logan, Ipswich, and bought heavily there.
Okay. And is that where you've been most active recently, or you're sort of operating elsewhere at the moment?
Yeah. That's at the moment, sort of again in talks with the buyer's agent, looking in the WA area.
Okay.
Yeah.
There's a lot of people starting to look at WA, whether it's the time is right yet. That's not for me to establish. I sort of ask other people what they reckon. But I know people are starting to sniff around that particular market looking for opportunities, and people are sitting around waiting for Brisbane to do something. What's your views of all that? Is it something going to happen, or are you just buying good stock that over time will be? Is it a capital growth play for you in Brizzy, or is it more of a cash flow yield play for you?
It's both. I'm hoping that the capital gain will be there in the next few years. People have been waiting a long time. So, and I think the values are starting to move, just based on what I'm seeing in like my day job. Looks like the valuations that we're getting, they're starting to stack up. And if you compare them to the valuations that we get in Sydney, Melbourne, getting absolutely hammered in those other two states. But they're sort of starting to stack up in Queensland, which implies to me that the market's starting to move. So, yeah, fingers crossed.
Fingers crossed. Look, we've got a lot up there as well, and we've bought well, just as assets. They perform now, but there will be a point in time when there will be substantial capital uplift over a period of time. I don't think it's going to spike like it did in Sydney, but I think it'll be steady performing moving forward. So I'm happy with our exposure in the Brisbane market, but I'm not rushing to get much more up there at the moment. I'm quite happy to sort of sit around and wait for a little while and see what happens with Sydney and Melbourne before making any sort of more moves. Do you think you'll revisit the Sydney market at a point in time?
Yeah, I think there will be opportunities. Yeah. I've seen a lot of other people sort of start to come back to Sydney, where the number of purchases in Sydney, in my sort of work and community seemed like little or none over the last 2 or 3 years of the boom. I think there will be some opportunities coming up.
Yeah. Well, we're focusing on that, and I'm asking people plenty of questions around it to see if I can tap some genius from where we should be sort of operating in this market. When we re-enter the city market, I'll probably be a bit creative with the type of stuff we'd pick up, some good opportunities around sort of upside investments. So rather than just cookie cutter type stuff that we can do things in the future. And you mentioned earlier on in your portfolio, are you now have you been acquiring assets which allow you to sort of do a split or a granny flat or, mini developments? Is that the sort of stuff you're looking at now?
Yeah. It hasn't been like exclusively that, but the bigger blocks of land, the councils that are likely more to allow these kinds of things. So it is starting to become a bit more of the focus.
Yeah. Is your investment philosophy to hunt bargains, or do you just look for good value strategic properties? Because I know a lot of people go through life just wanting the cheapest. Isn't necessarily the best, right?
No. It's both. Obviously, everyone loves a bargain. And
I love a bargain. Even if it's like a cheap sausage roll at 5 o'clock at the service station, I love a bargain,
And, some of the best properties that I have in my portfolio were those bargain category ones. But my view is strongly a lot of the times it's better to, when you're in a position and you're ready to, your finance ready and you're mentally ready to get into the next property. If there's a good solid opportunity, would you wait that up for a bargain? Would you pass it up for a bargain? How long do you wait for that bargain? And, it might be that you've taken a few opportunities and that are sort of solid, not necessarily mediocre, but good prospects, but not ridiculously under market value. And then maybe hunt that bargain when you've got that last pre-approval up your sleeve.
What's a bargain mean to you? How do you frame a bargain?
Significantly under market value.
Yeah. And that typically comes with some caveats of some sort. There's either something wrong with it, or it's full of termites, or, you've got to be able to see. It's picking a diamond in the rough, really, isn't it? With these bargains. Make sure you can realise the fact that it is a bargain as cheaply as possible.
I think also getting it off market is the other way you can get the bargain. And the one particular transaction I can think of in my portfolio was an off market where my buyer's agent called me up on the morning of the day that I actually signed the contract, and he said, "You really need to drive this contract down to Campbelltown right now." And I was like, no, I don't. I'm getting ready to go to work.
Yeah.
And he said, no, trust me. And by that stage, we had a good enough relationship for me to think, oh, you know what? I might take the day off and just, yeah.
So what was it? What would you buy?
I bought in Campbelltown, Roos, a suburb in Campbelltown called Roos, and it was a property for 250 or 260,000. It's like 10 years old, brick, garage. Like I spent $1,000 on it for a railing or something, but it rented out for $370 a week. So, you know, on a 500.
Why was it so cheap?
Because it was off market. Okay. And as it turned out, there was actually another buyer's agent on the trail as well.
So it was a race to get the contract.
It was a race.
Yeah.
And so I drove the contract to my solicitors. And then once she gave me the go ahead, I started driving it down to Campbelltown. I was on the M5. And then my buyer's agent called me and said, the other buyer's agents are at the door. We're stalling them. We're stalling the real estate agent, and they're at the back of the office. Is there any chance that you can do a money transfer right now?
Driving, yeah.
So I pretty much pulled over and called up the bank. They did a telegraphic transfer, instant money transfer. Landed at the computer, and we got the property.
Good story. So how far under market value do you reckon you picked it up?
It would have been at least 30 grand, I reckon.
It's not a bad day off work, right? Make 30 grand. Yeah. But this is about prioritisation, isn't it? You know, it's a bit of fun as well.
There was a bit of adrenaline.
Good energy. That's cool. And I'll wind out with this question, Z. How do you sort of, we spoke about the way you manage your portfolio and, you know, it's a headache come tax time and when you're looking for financing, but do you use property managers for everything you do to manage these properties? You don't do it yourself?
Yeah. Like I wouldn't manage a property. Like we did that actually before we started. My wife owned a property in her name before we got married, and we rented it out. And it was to this lovely lady, you know, single lady with a kid, and we found building a relationship with her was probably the most problematic part of it. We found that we were like going to collect the rent and then playing with a kid and then giving a gift for Christmas and then feeling bad when we had to bump up the rent and things like that. So we just thought
it's nice being detached, isn't it?
Yeah.
Because then it is, you know, property investment shouldn't be emotional anyway. So you don't want to get sucked in.
That's what we did.
Too close for it. But Z, look, mate, we've only just touched your portfolio and you know your attitude towards investing. I think it's a good summary, but I think we probably need to get you back in and have a chat. We can drill down into some of these renos that you've done and you know portfolio makeup and stuff. I'm conscious that we've just sort of really briefly gone over a whole bunch of different concepts on a portfolio, which is 25 properties. So it's a lot of moving parts there. But
sure.
I've really enjoyed the chat.
Likewise.
That's good, and we haven't even got into financing, right? You know. Trying to get a new mortgage on for a new property, do you need to show rental statements for all 25 properties? Imagine that's what the bank wants to assess these days.
Rental statements and also loan statements.
All the loans of 25 properties.
Yes.
I know what it's like. I feel your pain, right? It is the most miserable experience, no doubt. Luckily, I'm lucky I've got a really good mortgage broker, so I would hate to do it directly with a bank. But anyway, let's get you back in, mate. We'll have a chat in a couple of months' time.
Sounds good. Look forward to it.
Really appreciate your insights, mate. It's good fun. Remember to check out smartpropertyinvestment.com.au. There's plenty of stories like this from investors all over the joint. And Z's, you know, 25 properties, it's a large portfolio and, you know, a lot of scar tissue you sort of bring on board with that number of properties. So I think there's a lot we can learn from him. But if you've got a story and you want to come on and have a chat about how you see the world, remember, editor at smartpropertyinvestment.com.au. The team will get back to you and we'll sort that out, or send us a direct message through any of those social channels. Smart Property HQ, just go and search it. Remember, if you're not subscribing to our morning newsletter, so you're the first in Australia to know what's going on, markets right across the nation. smartpropertyinvestment.com.au/subscribe. And if you like what we're doing with this podcast, remember to press that subscribe button on any player that you're listening to this on, whether it's the Apple stuff or some of the other apps. Just press subscribe, and every episode we do, we'll make sure it feeds straight into your feed. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.